The coronavirus has crippled the Chinese gold market, sending demand spiraling downward at a time when investors elsewhere in the world they happen to be seeking out gold for its safety purposes. Now, this is really big news because China's the biggest buyer of gold bars, gold coins, and jewelry in the world. But the national shutdown of the nation to contain the coronavirus has emptied malls, while the premium charged to buy the metal in China has evaporated. This now means it leaves the industry staring down a long road to recovery, especially when taking into consideration slower retail consumption in India, Europe, and the United States, as well as Russia's surprising decision to halt all gold purchases by its central bank. Now, to speak on that, Russia spending more than $40 billion building a war chest of gold bullion over the past 5 years, and now it's calling it quits today. April 1st, 2020, and no, this is not an April Fool's joke. And keeping with Russian tradition, when asked to explain what's going on, the nation did not explain the move, and analysts are now saying that Russia already has enough gold stashed away in reserves, and it likely does not need any more. But back to China, last year, Chinese consumers, they accounted for roughly 1/5 of total gold demand with 4,356 tons, according to the World Gold Council. But to kick off 2020, China's retail sales of gold, silver, and jewelry plunging 41% in just the first 2 months of this year. So here's the real question. And no, it's not if gold demand in China will return, because we all know it will. Everybody likes gold. It's shiny, it's fancy, it's worth a lot of money. The real question is, how long will it take to see a rebound in Chinese demand to levels they were once at, well, just last year? That's the real question. For Modern Wall Street, I'm James Sweeney.